Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, September 24th, 4:32 p.m. Eastern Time, coming to you from Jim Thorpe, Pennsylvania, the Switzerland of America, with the big show, the week-ending edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world-famous 21 over 21 leaders list. Let's get right into it. State of the market. Back into an uptrend. It's a tenuous uptrend. We want to see a little bit more strength next week to solidify it. If we look ahead here at the trend gauge, you can see market leaders. We had Thursday's close, we had them at neutral with the green light pointing to the bullish uptrend. The G5 had a lag day, but did close. 4 of the 5 components closed at the top of their range of the day, and plenty of leaders recovered what they gave up on Monday. That's enough to put us back into a bullish posture for market leadership. Short term, we upgraded from bearish downtrend to neutral. 2 closes above the 21 now, and most of the indexes we want to see continued strength next week, and this will all become obvious when we go through the charts. Medium term, still neutral, arrow pointing toward bullish, as again we've got a mixed bag versus with the 50-day moving average. Just need to see a little bit more strength to solidify it. Long term, going all the way back to July of last year, we're in an uptrend. This is why we talk about investing over 3 time frames. The market never gets into serious trouble unless you break the 200-day moving average. So we rarely go to all cash. I know William O'Neill disciples that traffic in growth stocks occasionally see the situation where you're in all cash, depending on what's going on with the market. At Revere here, we do hedge at times and certainly reduce our exposure, but as long as the long-term trend is up, we're not going to be really shorting the markets or completely have a zero beta. So what just happened today? Top of range close to a volatile week. Quickly recapping the week, we gapped down very ugly on Monday over fears of a contagion, a financial contagion based on a large, primarily real estate, but they're in a bunch of different businesses also. Evergrande, not so grand, serious bond payment cash flow, bankruptcy issues, market's uncertain, exactly what banks are concerned about it. Check our podcast out. Tim talks about how there's a lot of fear that the Tether cryptocurrency is invested in Chinese bonds. So that added another spin to it. But we recovered a good bit of that. Nice close on Monday. Nice reaction into the close. Follow up with a gap up on Tuesday, but we reversed and faded. Then a nice move up on Wednesday into the Fed, and then a further move to the upside to close Wednesday. More upside on Thursday. Gap down, mild gap down on Friday as more. Thursday and Friday, the Chinese government injected liquidity into their markets to keep credit markets from freezing up, so that the markets bounced a little bit on that. The Fed indicated tapering. That was kind of expected. The markets reacted, didn't react negatively to that, let's say that, and then a strong Thursday with the follow-up. Some more negative talk about Evergrande overnight led to a gap down open, but we closed strong near the top of the range on Friday, and really strong close to the week. Good bounce back from a gap down on Monday, and all in all, a positive for the market considering the underlying negative currents. G5, that's our growth index, made up of 5 growth ETFs that we track, lagged today. They gave back some of the gains, but they really did outperform. Tuesday up 0.2%, Wednesday up 1.5%, Thursday up 1.6%. Just a retracement of that, down 1% today. S&P closed up 0.15%, Nasdaq up 0.1%, Dow up 0.1%, mid caps down 0.1%. 1.6%. Russell 2000 small caps down 0.5%. Primarily that was the growth portion of the Russell that lagged today, and that's one of the components of the G5 growth index that we track. So let's start diving into the charts now. And first, we'll dive into the team here at Revere, who our goal is for you to never take the a financial 2x4 to the back of the head, such as a lot of people saw in the year 2000, 2001 when the internet bubble collapsed, and the year 2007, 8 when the financial markets imploded, and during COVID when you had a 34% drop in 5.5 weeks. And that's because we're technicians. We monitor the markets. We can tell the overall health of the market. When the market's healthy, we put our foot on the accelerator, buy the strongest stocks in the strongest sectors. When the market gets a little bit weak, we pull back a little bit, lock in profits, keep our losses in place. If the market goes into a downtrend, we get the heck out of the way and wait for the wind to get to our back again. It's a common sense approach. It's an approach that you do with basically every other factor of your life. What other situation when things go wrong do you just ignore it and hope it'll get better? No, people take action, and that's what we do with portfolios. And if you're interested in an approach like this, give us a call at 855-REAL-WEALTH. That's 855-732-5932, or you can email any of us. It's our first names at revereasset.com. So that's Tim, Dan, Hunter, Muriel, Alex, or Don at revereasset.com. Okay, let's get into the charts here. We'll start off with the S&P 500. Let me blow this up a little bit. And you're going to see really some consistency. Some consistency in the story. Gap down, held the 100-day, bounced, undercut and reclaimed the 100-day moving average. That's the purple line on this chart. On Monday, that was the ugly day. Gap up on Tuesday, but closed at the bottom of the range. Still an inside day, and then recovery Wednesday and Thursday, and then a gap down, undercut the 50 and the 21, close above the 50 and the 21 on the S&P 500 on Friday. That's good enough to get us back above the key moving averages, and all in all, that's a pretty healthy close in the S&P to the end of the week. Nasdaq 100, very similar, gap down, didn't quite get down to the 100-day moving average. Inside day on Tuesday, recovery on Wednesday gets us back to the 50, Thursday gets us back to the 21. Could not quite break above the 21, but we're holding the 50. In fact, we're basically sitting right on the 21 to close the week on the Nasdaq 100. All in all, a good top of the range close to a volatile week. Dow Jones Industrial Average, this is the weakest of the indexes. You can see the gap down, still held above the 200-day moving average. Recovery inside day Tuesday, recovery Wednesday, Thursday, inside day, top of the range close on Friday. So again, we got some consistency there. It's the only index below the 50-day moving average, but a couple of them are just like barely above the 50-day moving average. We want to see some strength there. Mid caps gap down, held the 200-day moving average. You see the recovery, and then an inside day Friday closing right on the 50 and the 21, and then finally small caps undercut the 200-day, couldn't get back above it on Tuesday, did get back above it on Wednesday, powered higher on Thursday, inside day on Friday, bouncing off the 21. So there's your major indexes. Let's take a look at the G5 very quickly. Sorry, I think I don't want to do that. Okay, back to it, the indexes. So let's start off with IWO. You can see the gap down, strong recovery, inside day on Friday. Very consistent on 4 out of the 5 anyway, but there is one laggard, and I'll show that one last. FFTY, inside day near all-time highs. Very strong recovery for the IBD 50 index here. QQQJ, this is the mid-cap. Nasdaq 100, strong recovery, closed above the 21. PDP, this is a momentum index, same situation. approached all-time highs, backed off. Here's the fly in the ointment, ARKK. Kathy Wood is loading up on some things that are really don't have very nice charts. She's a longer term player, but this is going to show up in weakness in the overall chart of ARK when you're buying stocks that don't have strong charts. One exception is Tesla, which had a nice day today and broke out of a recent range, but there are some other holdings that are doing not so well. So this is the one out of the five G5 indexes that is not acting well. Okay, let's get on to some charts now of individual stocks, and let's start off with the three stocks that got kicked out of the 21 over 21 this week. The first one is Draftkings. Nice breakout. We bought this in this area on the breakout. We added to it, started to put in a handle, but then it broke the 60 support area, held the 21, but then broke the 21. We were out of it then, and then Tuesday they announced that they were doing an acquisition. The market didn't like it. Sell off on heavy volume, broke the moving averages, lower lows Wednesday, Thursday, Friday. This is if you still hold it, you've got some support here on the left side here, but this is we watch a lot of stories, but the chart's got to support the story. We still like the DraftKings story, but right now this broke down, failed breakout, and it broke down. So we're avoiding it, and it's out of the 21 over 21 list. DOCS, number 2 that dropped. This still looks good, but gap down and didn't note how this just did not recover. We're going to show some charts here momentarily of some leaders that gap down on Monday, but then nicely recovered Tuesday, Wednesday, Thursday, and Friday. This one didn't. 21 has rolled over, can't get back above it. Maybe it's just time for a base. Good story. But right now under the 21, so it's eliminated. And finally, AMT has been on for a very long time, going back to April, I believe. But XLRE overall and the biggest components of it, this is what they look like. They topped about 3 weeks ago. And components of XLRE not looking so strong. AMT, not a traditional REIT. This is actually wireless towers. But sure, it's a growth area, but look at the big selling bars here. You got to pay attention to that. And then the 2 bounce days, lower volume, couldn't get back above the 21. You see what happens Thursday, Friday, roll over. We see this pattern time after time. Correction time for AMT. So this comes off. What got added? We're going to see momentarily as I bring up the 21 over 21 list. 9 sectors, 18 industry groups, sorted by how recently they were added to the list. If we own it, it's got a red flag in here. 2 that have been in here for a while gave us alternate buy points this week, and we added to them, and I'll comment on those when we get to it. But let's start off with Doordash. One of the dirty 30 that had a heavy correction in February, more than a 30% correction from the top, started forming a pretty nice base, just kind of working its way higher, both in price and relative strength. And then a gap up a week and a half ago. Nice lower volume pullback, bounced at the 21. This is just really looking good as it's approaching all-time highs on improved fundamentals. So added Doordash. Also added Snapchat. This is another one that we bought here when it gapped up. Just couldn't hold the 21, but held the 50. Worked the base sideways for about 6 weeks. Strength came into it along with relative strength this week in a big way. I think people are selling Facebook, as there's some negative stories out there on Facebook about how damaging it is for teens, and also about how Apple's privacy is hitting Facebook mobile users. They're unable to target ads the way they used to be. So the theory is that money is flowing out of Facebook into Snapchat. The chart supports that. The volume parameters support that, and so does the relative strength. Definitely looking to reestablish our position in this on a light volume pullback to the top of this pivot. Bill, we added this week to the 21 over 21 list and also to the portfolio. So big gap up with volume on their earnings report, worked its way sideways, pulled back right to the 21, then did an offering. That was what was responsible for this gap down here on the 21st. That was Tuesday, priced at 272. So that makes 272 and a little bit below that a pivot area. So Our stop on this is going to be 1% below the low of Tuesday, and we added to it yesterday. It showed strength into the close. We added more to it. Nice tight inside day today, holding the 21 and holding that 272 area. Nice setup. Inside day, sellers came in when it dipped below 270, which is exactly what we want to see. So Bill added both to the 21-21 list and to the portfolio. Unity, we got stopped on this on the gap down on Monday when it closed below the 21. Upgrade and a nice gap up on Thursday, inside day on Friday. So stays on the list, but we don't own it currently. Lulu, working sideways nicely since we bought it above the 21, looking great in this consolidation. PWR, look how tight this has been acting. This was since a gap up on an acquisition, and they weren't the acquired, they were the acquirer. Harken back to Draftkings that we showed in the negative reaction to their acquisition. This one reacts positively, going sideways to up now in the building and heavy construction group. Affirm sold a piece of this on Monday on this gap down. It reclaimed it, made new highs today, but then pulled back along with some growth stocks in the market. But this looks like it wants to be a big leader, and we do own it. Ambarella, another one looking like a big leader. This is our largest position, and it started again with the gap up on earnings, follow through to the upside. A little bit of a pullback here at the pivot plus 20 to 25% area, but lower volume inside day. Nothing wrong with that. NVIDIA, gap down but bounced at the 50, reclaimed the 21, pull back on lighter volume and holds the 21 today. Devon Energy stopped on this below the 21 on Monday. Didn't reclaim it because didn't buy it back because of the Fed on Wednesday, and then it made higher highs along with the energy sector. We're looking for a gentle pullback to re-enter this. This is the best oil chart out there. Zim, pull back to the 21, bounced off the 21 inside day on Friday in mode. Man, this is tough seeing this one. We own this back here, got stopped out here. Harsh shakeout here. Look at this shakeout. Got rid of so many people holding it. A 10% down day, completely out of character, but it ended up putting the low and then just blasted on the upside from 115 to 176 in 2 weeks. Upstart, one of the big leaders in the market now, just continues to chug higher. We've got near triple-digit gains on this right now. Dexcom continues to just ride the 21 higher, looking fantastic. Datadog continues to ride the 21 higher. Zoom Info bounced off the 21, tested the 21 today, closed at the top of the range. Zscaler, looking great. A little bit of tough action here after it reported earnings, but the earnings gap down put in the low. And back above the 21 and riding the 21 higher. Costco, we also added this today. Fantastic earnings report. This is a big stock, double average volume, up 3.5% toward just shy of all-time highs. So we added a 6% position to this today. This has been in the 21-21 list for a while as it trudged higher here, then finally went sideways for a couple of weeks, undercut the 21, got some people out. And then blasted back above the 21 on its earnings report. Avantor continues to just trend higher nicely. Net has been in for a while, again, just riding the 21 higher, came back and tested the 21, had a downgrade today, so you can see the higher action. It also had a gap down yesterday on some people that apparently knew the downgrade was coming, but closed at the top of its range on Thursday and in the upper half of its range on Friday, which is just what you want to see on a leader and how it responds to weakness, and bounced right off the 21. Beautiful action. And finally, Chipotle, we added this to the portfolio this week. Again, another one that had the gap up on earnings, trended higher, working its way sideways, and bounced off the 50-day moving average. Some volume came in as it got back above the 21, and now it's near all-time highs. It's a nice 5-week consolidation that it's putting in, and that's the 21 over 21 list. As far as portfolio changes this week, we've covered most of them. We put a hedge on on the S&P 500 when we had that gap down. We took it off in several pieces this week, so that's completely out, especially with the close above the 50 and the 21 that clinched it. Closed out the last piece of it today. Took 2 portions of it off as we worked our way higher off the 100-day moving average this week. So the positive action, no reason to be hedged anymore. And talked about our additions this week of Chipotle, Bill, Costco, some trims to various leaders, but really the only position that we completely closed out was Draftkings, Devon, Docs, and you. And Docs also came off the 21-21 list. I mentioned that, but you still acting healthy. It's still on our leader, our 21-21 list, and we may re-enter it. But we do have a pretty full portfolio right now, holding 15 positions. That's going to wrap it. As always, like to hear from you if you have any questions. I'm on Twitter at @Vandenbord. You can email me, don@revereasset.com, or phone 855-REAL-WEALTH. One thing I do want to show, and occasionally we use this, turning on the stochastics, giving you an idea of where the whether or not we're overbought or oversold on the indexes. There are a lot of systems out there that use a stochastic cross down and a break below this 80 level, which is overbought, as a sell signal. And similarly, that same signal, when you come back off of oversold and have the stochastic cross and get back above the 20 level, that's a buy signal. So you received buy signals in all of the indexes this week. Let me just go quickly through them. SPY, Nasdaq 100, the Qs, same thing. You got the cross coming off of oversold. Dow Jones Industrial Average, same thing. Mid caps, MDY, and small caps, IWM. So stochastic buy signals off of oversold for all of the indexes. You can see that these seem to work pretty well. Let's see if it holds. If it doesn't hold, it's a quick stop out. Not a single, really one here, but we weren't off of oversold where it was a false signal, but it's a fairly reliable signal. It's good to get it on the indexes on all 5 of those ETFs. So wrapping up Friday, September 24th, this is Don Vandenbord telling it like it is. Thanks for listening. Have a great weekend.